Hi, good morning, everybody. We'll be starting shortly. So, just want to check that you can hear me loud and clear. All right. We'll start in a couple of minutes. In the meantime, just running through the agenda for today. I'll try to keep this within 60 to 90 minutes. Thank you for your time. I know it's very precious, especially on a Sunday. So I deeply appreciate you coming in here. I'm not doing this on YouTube, so it's a private server in Vimeo. So you obviously know I'm not doing this for any other reason but to catch up with you, whoever is in the Discord that's live. Casual chatting, running through the charts, making sure we're more intelligent after the stream as we were before. So let's spend this time productively together, and more importantly, catch up. I want to start the new year next year with a deeper relationship with you, and so that requires me to spend more time with you, more than just Mondays to Fridays, through technical training with the charts, but more importantly, deepen our relationship in another level. And I thought live streaming would be quite a good tool to do that. So hopefully, this does add a tremendous value into our objectives, and we can continue to prosper and soar together. So that's my goal. I hope to get that done. So you see, when we have a goal, we have a target, we institute behaviors and habits and into our system, and we just have to keep doing that regularly, knowing that they contribute to the bigger picture of the goal that we have in mind. So obviously this is part of my habit and behavior that I want to alter, to provide more guidance to you and to help you with this new year ahead. I think I can do more, but I need time, obviously, to eke out. It's all about managing time and the responsibilities that we have. I have plenty, but so do you. So it's about finding that best arrangement, and having this on demand is also very useful, right? Everything we have in the Discord server is on demand. You can search back, and obviously trying to introduce AI to help us with sorting out and organizing information and data. So that's a goal that I want to achieve next year. Good morning, people who are just joining in. Right, so let's get it started. The agenda for today right here. So we've started now. This is not starting shortly. This is started. Right, so let's just do a quick analysis of the charts. Let's get it started here. Right, I want to run through Friday because Friday is a red day for me. Just one red trade. You don't rarely see me get red days. And Friday is an exception. I gave up right after that first red day. I thought, let's just go enjoy the day and stop trading, because the market also didn't trigger some major levels to introduce volume anyway. So you can learn a lot more from my red trades than my green ones. So it's good that you learn from that. Now, firstly, we have to understand the context for Friday. And understanding the context for Friday is very important because we ended Thursday on the continuation structure here, right? So this was Thursday. Understanding Thursday was important because I would take a look at Thursday here. Understanding Thursday was important because the market was trying to build liquidity amongst the 5-day and 20-day moving average. As you see it average it out here, you see it concentrated within the chop within that 5 and 20-day. So the market was clearly trying to build liquidity here, even though we had some strong red in the middle of the day. Now, this was Thursday. So understanding Thursday was important because then you see that the market was already trying to build liquidity on the way up, especially with the gap up right there. You see this very clearly now, but it was already clear for most of us because of the magenta that was already building liquidity here. So this is not unsurprising to you, right? Right here you saw that already forming. So what we needed to see was a microstructure to show buying continuation on Friday. And so you saw me charted this. Give me a minute, guys. I got some technical difficulties here. Let's see. Okay, much better now. Right, so I charted this green buying continuation structure here. So it provided some context. So if you wanted to short this, you would have to wait for some confirmation here. Right, so Friday was quite straightforward, understanding that this was a buying continuation structure. And if you wanted to short this right from the get-go, I told you if you wanted to short this, you had to wait for at least a 5-day to turn into some sort of resistance. So that was clear. There's absolutely no reason to short this heavy. If you wanted to short this heavy, you could wait for the 5-day to start being retested, especially once we try to grab the liquidity here. And when you can understand that, it's the first thing. The second confirmation, if you wanted to short this, was to wait for at least the green algorithm to break. Now, if you were like me, you took some longs, right? I took a long trade a little late, but if I were a little bit more diligent on Friday, I would have tried to time the long along this support of that green buying algorithm here. And you see the wicks here. You could have still gotten very beautiful trades here. You still see it's still a very clear buying continuation, even though we proceeded to taper slightly to the orange. So it's a clear buying continuation on Friday, right there. I took a trade on the break of pink, I think. Let's take a look at my trade here. 1033.51 with 1033. Yeah, right after this green candle here. Right, so it's right here. Now, this was quite clear because you already identified the teal. You see, the beauty of the penny perfect algorithms is to understand. You can see the teal was just clearly building liquidity. Now, at this time here, we also identified the pink, I think. Right, there was some pink was already trying to build liquidity here. And so this was quite a clear structure to take the trade. I didn't build, I was a little hasty with this. So you see, I had very bad timing because I took the trade on this green candle here. It would be much better if I waited for this red candle to take the trade, base it off that blue support and that pink support. And this was why you hear me say this, right? I didn't have sufficient runway to protect, which is the truth, because once I took my trade here, I completely had No runway to protect this trade. I couldn't get it positive. No, I couldn't. You know my style. I would protect it as soon as I could. But absolutely not able to. I'm not able to get a good trade to protect this. And once it broke back down, let's see, where did I stop this? 43. 43 was about here. Once we broke back out of this orange, right? So you see, I scaled down. Now, obviously, this was a scaled down trade, so I could buffer a higher stop loss here. And you see, once I broke out of that orange, which was the last resort, right, I cleared my trade. Now, options is extremely scary. All right, because of this red candle, I stopped my trade in this large red candle. I experienced more slippage than usual, right? And this was only, I would think, about 0.3 point difference from opening and closing, right? So if you're trading futures, this could be minor to you. But if you're trading 0 day to expiry, especially something that's slightly out of the money. Now, this is out of the money. If I'm not wrong, the strike is about here, comparably from SPX and SPY. So it's out of the money, especially in the very choppy day here. So this was a big difference. You realize this stop is not acceptable if I were trading larger contracts. I think I took only 5 or 10 here. I don't remember. It's not much. It's a small red day for me. So you understand, technically you still have to trade a structured demand. And the better entry was obviously taking it near the support, as I always tell you. So I don't always have perfect entries, right? You can see that here. If I took it here, I would have protected it by then. It would be a clear. It would still be a green trade, and I would have the, the mental capacity to maybe take a second trade instead. So when you understand this, you can see that there is no continuation structure as well. So on Friday, more importantly, this is something you learn very clearly that I always mention, and you have to require the discipline to appreciate this. I always say if there is no precision algorithm that breaks out, there is just no trade. As much as possible, there's no trade. There's only one trade here, I think, that I may have taken if I were trading more diligently, and that would be this magenta break here. Now, even in an uptrend day, you can always still take a counter trade, because you must remember your objectives. You're finding profits in the charts, and this is an important skill because you cannot always be looking at the charts. So the direction is irrelevant to you if you're not looking out at the charts for 6.5 hours. So you have to understand how to be looking out for trades, in this case, at any time of the chart. Say you have only ability to trade 30 minutes, 1 hour a day. Right, that's what you do. You try to look out for profits that you can find within the charts at any point of time in the day. This would be a trade that I would take because I saw the tapering of the magenta right here. Got your profits. There's a precision algorithm right there. You could have easily made 5 figures here. It's possible. This was about a 1 point trade here. It's possible, but I wouldn't. Probably not on Friday. If this happened a little later, probably, yeah, this would be more likely a 5-figure trade here than this, because it's slightly later in the day. But that aside, you also see how magenta's not broken at all, right? So there is some tapering that's happening here as well. So quite straightforward on Friday. Without the algorithms, if you look at it laterally, that's just chop here. If you take a look at a 30-minute chart, you would see it more clearly. Now, 311, when you see numbers like that, you know I'm taking more than 1-2 contracts here. It's an average price of all the contracts together. I close them in tranches. I don't just close them in one price, because you have to understand that your orders don't always get to be filled. So yeah, that's why you see this, right? Right. So Friday was a difficult day. If we're not trading Friday, that's fine, right? I added this this yellow tapering there, so you see that there is a limit, especially with that 680 yellow that we were talking about, right? So it barely broke out of that 680. Now, there is a very key concept of trading you have to know, especially if you're a newer trader here, because many of you, when trading, are very binary. It's either 1 or 0. Trading is absolutely not binary, because you have to understand that, say, some of you think just because the price is above this particular level, it must be bullish. That's very new trader, beginner trader thought process. Right? Just because it's above, therefore it must be like that. See, that's binary. Unfortunately, it's not like that, right? I use an analogy often. Say you buy a can of Coke somewhere for $1, right? And you go to a more expensive precinct and you buy it for $1.50, and you're actually fine with it. So it doesn't matter that $1 and $1. Anyway, you're not going to buy a can of Coke at this price now. That's just for example, yeah? You understand that you accept buying $1 and $1.50 at different points in time, wherever you are geographically as well, right? Some places I know still selling Coke at what? I don't know. $1, yeah, you may. So the point is this: price is not binary. It doesn't mean that this particular price is respected. It will always be respected at that price. And this is why you see that there is always spillover, right? So although we have established that this is a very important zone, and when we are slightly above, it doesn't mean that's going out. And so this is why I always talk about structure. The structure will determine if there is a buildup of pressure to break out of that range. So what you need to be looking out for is whether there is structure that's building up within this. So for example, if we do see pink that's building liquidity here, and you don't clearly see pink building liquidity because there is no follow through from this. The follow through will be if the orange starts breaking out of this range. If this happens, yes, then you see the bulls are building liquidity to break out of that range there. And so it's very important you understand when you start learning trading, especially you watch rubbish videos, right? People who don't know how to trade, they're trying to teach you how to trade online. They're rubbish. What they do is they only teach you horizontal levels, right? And especially in signal groups, what you get will be, if this passes a certain price, you buy. If it passes a certain price, you sell. Yeah, sounds familiar to you? That's wrong, okay? That's wrong. So you have to understand that price, as you can already see with the respected algorithms, that price travels not just horizontally, right? But it's over range, over obviously the time frame, right? So in this case, using the 1 minute chart, we're able to concentrate the volume and the price action within certain segments using the algorithms right there. Obviously, larger time frames, as you've already seen in the 30-minute chart, it follows the same concept, but different framework, different rules. Slightly different, isn't it? You see familiarity in the 30-minute chart and the 1 minute chart. It's the same concept, same idea, but you realize it's slightly different interpretation, right? You have to adjust your perception slightly different. So that's the thing about understanding using this 2D model, right? A chart is a visualization of your data in 2 dimensions, right? Because we have the X and Y axis. That's it. But when you start to become better at trading, you're able to look at this beyond just 2 axes. You're able to see maybe 3, 4, 5 axes here. How is that possible? In math, right? It's denoted by, if you know, you know, right? So these are imaginary. You cannot visualize it, but they exist. So the point is, if you can be able to visualize this data, all right, into 5, 6 dimensions, you would have succeeded in a way in interpreting data for your trading decisions thereafter. So when you see things just simplistically, right, just horizontally, you are going to struggle because you realize it's not so binary after all. And this is why you get stop hunted. This is why you cannot stack your knowledge, because this just doesn't make sense. When it doesn't make sense, you cannot build a foundation on top of it. You see, you cannot build your knowledge on top of foundations that don't make sense. And that's what most people are doing, feeding you wrong information. These people don't even understand how charts work, right? Ask them about interpreting data from a 2-axis model, and understand they can't even explain beyond that, right? Do they even understand a derivative of a 2D chart, right? And how do you interpret this? And do you understand that there is a derivative to this and a derivative to the derivative? So there are, in fact, plenty of data that's in this chart. Now, do you have to compute them? That's the question. If you want to make a trading decision, you shouldn't be required to compute them to the point where you cannot handle it. So you see, your input and output has to be in equilibrium. And our output is obviously our ability, right? So you don't need to have too much training, right? So you just have to ensure that your input and your output is able to make sense for each other. Some of you have tremendous input, but you don't have the output. That you swarm yourself with too much information that cannot make sense to you. So that's important. You have to understand your limitations in that way. And if you get better, right, some of you are probably even better mathematicians or data scientists than I am. I know some of you who are already automating your trades. You're probably some quant traders out there, I don't know. Every input matters to you because you can make sense to help you with your output. So my point is very simple. You have to keep it simple for yourself, right? Now, data visualization is the simplest way of interpreting data. It's the simplest way, right? Visually, most people are visual learners. So this is the most easy way to do it, because you're able to make use of an extra sense in this term. You're using your vision as a way to complement your other senses. If there is a way to interpret data with smell, we would certainly be utilizing that, because we can do that at the same time. You see what I mean? So there are other disciplines or sports where you have to make use of different senses in order to make good decision. So that's the point of it. It's about concurrent input of data so that you can make a good decision from your output. So when you understand that, it becomes really simple. From the charts, there's no scent. You can't smell anything from this. You can't smell fear. Some of you can from the charts. I can sometimes. Well, capitalize on that, right? But okay, that's besides the point. But most of the time, you can only see. So what you see is very important. So you have to learn how to visualize your data more effectively. So data visualization is really important. Now, obviously, having some mastery over numbers is also very important, because this is the way you interpret data from the charts. So if you tell me that you want to trade, but you're not good with numbers, you're not good with very simple arithmetic, you need to improve on that, right? Because this is the obvious way that the charts are visualized to you. So these are very basics that you have to consider. But you probably never ever thought about them, isn't it? So as we start the new year, right, you need to, this is what I mean by getting back to the basics. When you get back to the basics, you can build your foundation on top of it, and you will get better and better and better. Instead of going straight to the most complex models that you don't even understand. Because some of you use MACD, you use RSI, I don't know what else do you use. What are they? Do you even understand them? Right? As basic as Bollinger, go find out. What are the Bollingers? Go find out what is the 5-day moving average. Some of you use EMA instead of SMA. Go find out what EMA is and why is it accurate. Right? There's a common 5 and 21, I think. Right? I want you to backtest this. I want you to instead use instead of 21. Right? I want you to use 19 and see if it fits anyway. And you realize that the average, it's not about the numbers 5 or 21 or 19, right? Because let me tell you this also differs according to your time frame. It's different for 1 minute compared to 5 minutes, compared to a daily. And you see, you don't even understand what it means. You can't even, it's just only because it fits somehow. You had some confirmation bias and it became your identity without understanding. When you do that, it's dangerous because you get false negatives. You get false positives. And worse, you get false negatives. And this is why it frustrates your trading, because you can never get meaningful data to help you improve. Because how are you able to come up with a separate framework to verify false negatives and false positives? So you see, you're creating so much complication in your trading thereafter. Right? So this is why I use SMA, and it's daily. It's the daily. It doesn't matter what time frame you're in, because the simple moving average of 5 and 20. And there's a reason for that, and I've explained that many, many times. So the point is, you need to understand why you're using whatever you're doing so that you can build upon it. Because otherwise, you are going to struggle, I tell you, because you cannot build upon your knowledge. And keep it simple. Because when your input is overcomplicated, you're not going to make good trading decisions. And your profits will come from your trading decisions. Keep it simple. Right? So, with that, the challenge for you next couple of weeks is to truly delve deeper into understanding the tools that you're using. So people who found me in the early journey of their trading, you got it lucky because you have very little to unlearn. The most difficult thing about learning is the unlearning. This is why getting good education is important, because if you learn the wrong things when you are younger and when you're newer, you're going to struggle unlearning it. Are things fundamentally wrong? You have to ask yourself that. With knowledge so prevalent now that you can't easily search, you can't easily have answers to everything now. It's much easier to learn, but you may learn too much, and you don't have the foundation to learn properly. So when you can do that, and it is able to contribute to your trading decisions, you're going to do pretty well, right? Because the point is, and some of you take it personally, and you shouldn't, because the thing is, every indicator is a derivative or is a visualization of data that already exists. So there are millions of them, right? Everything is formulaic. So you have to understand that and use that in your trading decisions. It's complex because it differs from time frame. It differs from it just differs from your trading strategy as well. So keep it simple. The trading is really easy. It's really easy. All you got to do how hard can this be? Right? You make it difficult only because you create different layers in this. Your greed, right? So you, instead of selling high, you sell higher, right? So you create complications to your trading, right? This is an example. So the point is, keep it simple. Now, if you can't even make money, you shouldn't complicate it. And this is the problem with people trying to chase after the next shiny thing. When this doesn't work, you chase after the next thing that you think will make it work, and the next, and the next, and the next, right? Instead of building strong foundations and building it up like that. You see the difference? So stop chasing, right? In every checkpoint you are at, you must have the discernment to know whether it's right or wrong, and whether it's a strong foundation you can build upon. So when you understand this, it's much easier, much better for you, and you can make better decisions from there. All right. Now let's take a look at there's something I want to talk about as well, something additional that I want to talk about here. I think it's Thursday here, right? Let me just check this again. Yeah, I think it was Thursday. Let's take a look. Yep, that's right, 10:44. Right, when we broke out of that pink algorithm right here. All right, give me 10 seconds. Yeah, I'll be right back. 10 seconds. Okay, I'm back. So Thursday was quite straightforward once you're able to identify firstly the 5-day and the pink algorithm here, isn't it? Right, so I think we nailed this. Let's take a look. Yeah. Right, so understanding this was quite important. Right, I think it was much earlier. Right here. Right, because we already saw, this was much earlier, right, at 10:16. At 10:16, you would have already seen the liquidity that's built with the pink algorithm here. Nothing surprising. The fact that you could identify the pink algorithm will give you the edge in understanding that the bulls are building the liquidity here. Now, the next question will be whether they will grab it. A 5-day moving average was running through the pink algorithm here, right? So there was some clarity. And the most important thing is identifying this magenta as well, because it will prevent you from shorting until we broke below the magenta, right? So you didn't even have to wait for the selling precision to appear before you get faked out. You shouldn't even have the decision to short this yet until it breaks the magenta at least. So it turned out to be a beautiful inverse head and shoulder pattern right here because of the magenta grabbing that liquidity that you already saw building from that pink algorithm right there. Now this became absolutely beautiful because you saw the blue precision algorithm breaking out from that. Give me a minute here. Yeah. All right. So when you understand this, it becomes quite straightforward. Now, I wanted to talk about this because it's important you check in live during the trading day. Now, if you have the luxury of that, that's preferred, and that's why there's certain diligence in staring at the charts, but not to trade, but to learn. Because remember when I talked about different dimensions of trading information that's presented on a 2-dimension chart, this is one of them. Because you see the strengths of the candle, the movement, the momentum of the candle when they move. Now, the larger the candle, right? This is on hindsight only because you see larger candle here, but on the trading floor itself, when this was live, you could see the strength of the candle, right? How quickly this large candle formed, for example. So that's strength of the candle. And SPY is an extremely liquid ETF, as I always mention. And so there is a certain consistency in the size of the candles. So what I mean is, because it's a consistent volume, on average, with a large sample size, it's very, very liquid. So when you see larger candles, especially if they move fast, it is with assumption that it comes with large volume, especially in the day when all the candles were slightly smaller, and especially if we are running up in that precision algorithm. The volume chart, as much as I like using them, is a data that's lagging because the candle has to complete before this is printed. You understand that? So what I want to challenge you as well, if you're practicing, is to learn to identify volume, and I've taught you this before, is to learn to identify volume, not with the volume chart, but in looking at the candles, the momentum. And I also gave you a tip to open up your options chain, and you see the running numbers running faster than usual when there is higher volume. So these are, tools of the trade, isn't it? The volume chart only matters as a confirmation later on, right? So you use this to learn, obviously, and you use this as a data that you can use to review, right? So I was right about this because firstly, I saw the precision and I saw the size and the speed of which the candles formed its size. So when you can understand this, you can understand how to see volume beyond just numbers, right? It's once again, as I mentioned, a data visualization. What your eyes can see, they help you. And speed is a derivative, because speed, for you mathematicians right here, is a derivative, right? If you have a distance time chart, speed is your gradient. Well, that's basic high school math. So you understand that, right? And if you have a speed time chart, acceleration is your derivative. It's your gradient. And when you can understand that, you can be able to see data beyond 2 dimensions. You get what I mean, right? So these are things I would want to teach you next year, because when you can understand that, you are able to capture more data, but yet keep it simple. You don't need too much data, right? You don't need 10 screens blasting you with data that you cannot digest and make good trading decisions. You need to be able to know when to pull the trigger within microseconds and when to get out of a trade or get profits within microseconds too, because you already have data in place and prepared, and that can only happen if you keep it simple. So my objective to you for next year is that you must prosper. I'm sorry to say this, but the way to prosper is to keep it simple, even in your life. If you're buying things that you can't afford to please people who don't like you, or you don't even know, you're in trouble. Keep your life simple. Keep it simple. Keep your trading simple. Keep your mind simple. Keep your heart simple. Don't complicate yourself with things that are beyond your understanding or your responsibility even. Right? What's going on? I know the world is in trouble. What we cannot control, we leave it to higher powers to do it. So you pray, you volunteer, you give money to organizations that are doing that, right? So you see what I mean? Instead of creating a behavior and attitude that you have to be involved in every way possible. And trust me, the path to hell is filled with good intentions. You may have good intentions, but you're not contributing. So the same with trading. You may have good intentions to want to improve, but you do not contribute to your own success because you're not doing it in the right way, in a meaningful way, in the focused way. Keep it simple. When you keep it simple, your life is simple, right? You have so much more focus to know what to do is right. Now, the time will come when you have to step up. You will know that, and you will then be challenged to do more. Regardless whether you're an activist, and some of you are, which is very admirable. When the time comes, you know you have to do more. But in the meantime, you support the other people who are able to do more, right? Because the point is very simple. If you're wanting to establish and do big things, the minute you think that you can do anything big, you have failed, because it's never about you or me. It's always a team or a group, an organization that will do big things. We are just mere contributors to that big thing. And that's the trap that most people fall into, right? And today, the youngsters, they call it, what do they call it? Main character syndrome or something? Yeah, along those lines, right? My kid was just telling me that. The minute you think you're always the main character, that you can make the change, you're in trouble, because the chances are you're doing it for yourself and not for what you're purposed to be doing. So focus on keeping it simple. Yeah. Right. So Thursday was important, right? You understand that, and once again, it reinforces what I want to teach you about the understanding of the data, interpreting more data on a simple chart. Okay, now let's take a look at a 30-minute chart here. I want to talk about the next 2 weeks, but contextually, you have to understand the next 2 weeks will be filled with trading holidays. It will be extremely low volume. Doesn't mean there is no good trade. Well, you have to understand trading is not just about chart movements. I'll explain that shortly. But in low volume days, it is quite likely, there is a likelihood that the chart will just trend, right? Without resistance, without support, it will just grind, right? There is a possibility for that, whether up or down, right? In low volume environments, that is a likelihood. But trading is more than just a chart direction. So especially during pre-market, right? Some of you like to trade pre-market. And I always try to dissuade you from doing that. And I know Nasdaq is planning to go 24 hours. But the truth is there is already 24 hours trading. It will just be officialized. So it's not the brokers that will be doing the quotes, but the exchange themselves. So there will be some impact, but not much. So don't worry too much about that. So you have to understand, right, at this point, don't be too fixated on directions, right? When you are too fixated on directions, you missed a lot of the points where you have to find profits from. Because you don't find profits only from direction. You find profits from, now obviously, your spread, right? You find profits from how easy it is for you to fill a trade. You find profits from the volume, because just take a look at this compared to this, right? If you ask me to take 2 contracts here with very minimal movement versus 20 contracts here with this move, I can tell you it's a better use of time to wait for the market to open. You have confirmation bias at times because probably 1 out of 7 days, the market will move heavy during pre-market and after hours. And because of that, you think it will happen every day. But during market hours, I would tell you 5 out of 7 days, there will be movement. There will be profits to be found, right? Very rarely you get a market that is completely flat. Even during FOMC days, it's not completely flat. So you understand the logic behind that. And when you can understand that, it's just a game of probability. It's about preventing yourself from falling into that territory of false negatives. So you understand that. Now, pre-market, for example, if you're entering with 20 contracts, firstly, you get poor fills, right? Your bid-ask, right? Maybe you get, I don't know, 50 cents spread on SPX, which is usually just 10 cents spread. And because some of you don't even look at the order books, you buy, say you buy something at $1, right? And there's only 5 contracts available for that price. You buy it without knowing you bought 20 contracts. And it turns out the next bid will be 120. And you had to pay a 20 cents premium, which is a 20% premium to complete to your fill. You understand that? Chances are you don't even know this. And therefore, if you overtrade this, you're going to be in trouble. Most of you watch some live streamers that are not trading the real market. You have to understand that they're trading simulated markets. It's not real trading. And so therefore you see them getting fills so easily. The price doesn't matter to them. So they don't have to worry about all these small technical considerations that will affect the trades. And also chances are, if you enter a certain trade, and you will get trapped in the market if you enter too heavy. So build good habits for yourself, and you realize the reason why I don't trade pre-market unless there is a significant volume or even after hours is because you will eventually create very bad habits for yourself that cannot be translated effectively into proper market hours. When you can understand that, you are able to be a wiser trader, right? So it's also about collecting wisdom along the way, right? Trading is about wisdom. Some of you don't like to hear about that because I don't know why, but you can't trade well if you're not a good person. I'm sorry to tell you that. It's just the truth. There are terrible people who succeed in trading, yes, but they exploit others and they will get into trouble one day. Some of them do. Trading, I don't want to make it too black and white, but trading is about making good decisions, making many good decisions. I want you to learn to make good decisions, and the easiest way to make good decisions is to just be someone with wisdom, with discernment, right? You don't even have to be smart. Smart people make terrible decisions sometimes, right? But if you're a simple person, you usually make a simple decision, and you can make a simple decision to get out of things as well. So your losses are equally mitigated as much as your wins. You understand that, it becomes so much easier to you. Right, so the root of all these, if you want to engage in trading, is, to keep it simple, truly, right? Even your intentions, your heart, your mind. You and I, we are retail traders, right? We don't work for big corporations with some objectives that are maybe morally unhinged. But those are different, right? They are part of a vehicle or they're part of a machinery that's already designed to exploit people, for example. So when you're part of that machinery, you're just facilitating that objective that they already have. So you see, there are fantastic traders, but that's because they're part of a machinery that already make them bad people, and so they can succeed there. But you and I were retail traders, right? We are not part of a machinery that can assist us to succeed as evil people, right? Put it very simply like that. I hope that makes sense to you. So you have to know how to succeed, right? And it starts from the root or the heart of your trading desires. Okay, now let's take a look. I was at the next couple of weeks, right? As I always mentioned, focus your next couple of weeks on how to start 2026 better, instead of worrying about eking pennies from the charts to wrap up the year. If you're not already wrapped up for the year, by now, it's too late, right? You should already know how much tax you're paying. You should have already the money prepared to pay your taxes, right? You should already be consolidating for the year. So I don't want you to overtrade for the next 2 weeks. You need to be focusing on consolidating, on planning your approach for next year. If you want to, you can practice, right? Keep yourself current. That's what I would do. I would just put in one trade or two. Just look at the chart so I don't get too out of touch, right? And always continue to stay attuned to the momentum and to the context of the charts. So when you can do that, but you don't have to actively trade, you will be fine, right? Don't be overcompensating for something that you have not achieved. It's always a great story, isn't it? Having a clutch winner, right? You're always scoring in the last minute, or you're winning where you're the underdog and you suddenly win it in the last quarter. Great stories, but realistically, it's terrible implementation. You shouldn't be. If your life is lived like that, you will fail 9 out of 10 times. And that one time you celebrate, it's futile. I don't know why you're celebrating if your life is dependent on such moments. All right, so understand this wedge that we are seeing. Here, I just want you to be more careful, right? Understand that the Bollingers are contracting here. This is good, because there is a chance that we will approach the Bollingers because of this. So the Bollingers contracting is not a bad thing. It's a good thing. But now hopefully we get a resolution within the next 2 weeks. We retest either one of them. Right, so that would be good outcome. But more importantly, you have to remember what I tell you. That what's going to happen is that there is a possibility of a grind because of low volume environment, right? But don't overtrade this. Remember, I talked about the buying continuation structure, right? You have to continue to stay focused on that because the market is still in the buying continuation even though we are tapering. Especially now we are above the 5 and 20 day. Now 5 will catch up to the 20 very easily, right? And when that happens, it will continue to bounce up in the buying continuation until we retest the upper Bollinger. Right, so you look out for the 5-day moving average because that's where the bulls will have to base their liquidity on in order to bring the charts up. If we're not heading up in that orange at least, right, this is not great. What I want to see, however, is the market building more liquidity here. Now, the best case scenario. This is the best case scenario here. If it happens, it will be absolutely great. Is if we build more liquidity here and we grab this with 5-day moving up along the way and we start to trend up all the way to the end of the year. Right, best case scenario. Because we are already in a buying continuation structure. However, plenty of liquidity here where the blue is. I remember, as I mentioned, since the start when we were here, it's the blue that's dumping us, right? You notice it's the blue that's dumping us. You see the rejections from the blue. So the blue can still dump us right here, especially when 5 is still below 20, so watch out for that. If we rebuild liquidity and we break below this, you want to be looking out why the market is selling, because the market can sell in two people can sell in the market, right? The bears and the bulls. Very simple. The bulls will allow selling so that they can build more liquidity, as I shown you earlier here, to push out of the range. And the bears want to sell because the bears want to sell. So look out for that blue algorithm. Very, very importantly, you must watch out for the blue. Now, not just here, right, because this is a little too far off, but early on, I want you to be looking out for cups that are closing, inverse cups that are closing off that blue here, right, preferably off that 5-day moving average because we may be trending up here before we start having a rejection here in the first blue, before the second blue right here, and then the third blue at this level. See the strength of the selling because you notice all the dumps. Just pay close attention to all the dumps here. They are green. You notice that, right? So if it's not in green, the market is not truly selling because you see before the bounce here, the market was selling in that orange. It's not in green, right? Although I would argue that it's actually the magenta right there. So understand that if it's not in green, It's not fantastic, right? So now, when you understand this, you're prepared for the week ahead, right? And there it is, the wedge here for the week. Don't overtrade this. I will not be trading too much for the next couple of weeks because it's spotty. You have to understand that the market will be taking breaks in the middle of the week. Momentum will be affected. So you may have this propensity to overtrade, right? You will have this possibility of revenge trading because you don't get the continuation that you want. So if you have that inherent problem in your trading, avoid trading this couple of weeks, right? Even the market goes absolutely parabolic, you avoid it because you know that there is your weakness, and you just have to avoid the market because there will not be a continued momentum. So understand this, you'll be fine. Yeah. All right. Now where are we at? Okay, we've done chart analysis. We've done a little training and prep for the week. Now we're going to do some housekeeping. That's been an hour, just nice. Yeah, 1 hour here. I'll probably spend another 30 minutes here, 30 to 45. Can you allow me to take a 5 minutes break? I'll be back. Yeah, for 5 minutes break. Break time. Give me 5 minutes. Yeah, I can't even type now. Okay, I'll be right back. Right, thank you very much. I'm back. All right, let's get this going. Right, some housekeeping matters here. Before I get there, once again, thank you very much for tuning in. I know your Sundays are very precious. I truly appreciate you coming in here to learn. As I mentioned, I hope that after this live stream you become more intelligent at least, or you find value. You become a better person after the live stream than you are before. And if that happens, then I would have fulfilled my objective and I would have not wasted your time. So I thank you for that. All right, now, this next 2 weeks, the first housekeeping matter will be that the next 2 weeks I will be trading very lightly. I will be providing you a schedule for the next 2 weeks in the Discord server. So don't overtrade. So I will, first things first, I will provide a schedule for next 2 weeks. I would tell you when I will be in or out. If I am not trading, I will want to do something else more productive. And that is to provide some, maybe even live streaming during trading hours. If I'm not trading, I can live stream, I can teach you things. So let me consider that. I may just do very simple ones, just to try things out. Yeah. All right. So, okay, that's the first one. I will provide you the schedule for the next 2 weeks. And I hope you spend the time to calibrate for the next year. Right. So you need to focus on that. Okay. And the next thing will be life is, right? I know you're facing some technical problems. I found out why, and that's got to do with the permissions. So I will fix this by market open on Monday. So someone has found out the problem for me, and all I got to do is just to fix it. I will fix it by market open tomorrow. So my apologies if you're facing some technical difficulties, especially if you're not able to see anything here, right? I see the Q&A live stream already up. Okay. Right, I will address this later. Okay, later, please. Okay. So I will fix that later. So let's just note that down. So I know you're facing some problems here. Now, let's talk a little bit about the new program for 2026. So let's just quickly talk about that. Now, some of you are slightly confused what's going to happen in 2026 and why I'm introducing some programs here. Let's just put it this way. I want you to prosper, right? Prospering is not just finding success on the charts, right? You have to find success in other areas of your life as well, and I hope to contribute to that. Because I personally have experienced help, and it has guided my vision and shaped my values, and I found success from these values that contributed to my trading. As simple as that. So two things. The first one is, as I mentioned to you then, was having a stronger identity and purpose in owning something more than just making money from day trading. So day trading is truly, as much as we're doing day trading daily, well, that's the reason, right? We're here daily, and that's why it's called day trading. But as much as possible, day trading must be maybe only 10% of your success, right? Your contribution to your success, maybe even less. Day trading is a powerful multiplier, but it shouldn't be 100% of your profits. If you're depending on day trading for your life purpose, for your profits, you are undertaking too much risks on the daily basis. And so you will be in trouble one day or another, right? We are not perfect. We are human beings, right? So it's very, very difficult. Now, the reason I can successfully day trade almost every day is because it is insignificant to me. If this is 100% of my income, right? If this is 100% of my portfolio, I will be in trouble. I will have so much stress. And this is why I keep telling you, keep your life simple. I can survive with $20,000 a month, my entire family and the next generation, because I have already built a system that can help me, and I've accumulated enough wealth. Anything more is abundance, is powerful abundance. And because of that, I can undertake risks in my day trading without worry. You see the problem with that? Some of you have to depend on day trading. It's not a bad thing. It's not bad. But you have to understand, because of that, you cannot undertake more risks than someone like me. And this is why the banks, right, they can allow their newer traders to take risks, and they can siphon them out thereafter, the good ones from the bad ones, because they have the abundance in their liquidity. So when you understand that, okay, you will know that your day trading will get better with time, not because of only your skill, but because you are wealthier. When you have more money, this multiplies, right? It's a simple, very simple logic, right? So what you need to do, right, is using day trading. Now, day trading is a rite of passage, right? This is your baptism of fire. You're going to learn everything you need to know about the charts through day trading, because it's that intense. This is your boot camp. Once you can learn trading through day trading, right, on a daily basis, you will get better at your portfolio management, right? You will get better at your swing tradings, for example. And thereafter, you can build your portfolio and your wealth thereafter. Now, then it goes to the point about your wealth, because many of you anchor your identity on your wealth, which is not great, right? Your children are not going to respect you because you have money. You will learn about this, I hope. And some of you are established parents, even way more senior than I am. I think you would agree with me, right? Your children are not going to respect you because of money, and if they do, it's a little tragic, right? And this is why I want to create something beyond that, right? And it can only be done through the power of a community, right? So that's why we are going to have what we have in the Lifers program. I've already talked about it. It's only for members in the Discord, so I do not advertise this. And truth be told, this past couple of weeks outside of YouTube, I can't be happier, you know. It's so good to be not subject to external... well, okay, let me just put it bluntly. There are so many haters, so many. You don't see it because I don't always show them. So many haters out there. People who do not embody our values. People who are so lost, so wayward. I realize that the trading community online is lost. And that's why we have so much liquidity that we're profiting from. I see the trajectory of where this is going. I see how the banks or the big money, how they are influencing the retail traders. I see how they will get richer. It's troubling to me. Now that I'm part of this system, I am part of it. I feel conflicted because firstly, I feel that because I'm in it, I'm affected by it, right? People hate me. People are toxic to me. But yet, on the other hand, I see the need to help. So there's always this conflict. As I told you, If I think I can change it, I'm fooling myself, right? Once again, the main character syndrome. I don't dare to think of that. So I'm thinking how I can do my small part to do more, but that's the struggle, isn't it? That's the challenge. That is the place that I am called to go, and I am not willing.